In today's video we will be learning a few things about price action and pitchforks in a trade example that happened in the daily chart of the British pound versus the Japanese yen. Hopefully you'll be able to see how the same tools and analysis can be applied in all timeframes and yield massive results. There will be quite interesting lessons about buyers and sellers as well, so let's jump straight to the analysis itself. In the chart in front of us, we can see a simple formation indicating that sellers are controlling the major flow of this market. If you look at the price vectors from number 1 to number 3, you will be able to see that price made a lower low. When price surpasses a previous low like that, the high in between the two lows is classified as solid or confirmed. That means sellers from number 2 were strong enough to produce number 3 by surpassing number 1. For all intents and purposes, this means downtrend because sellers are more powerful than buyers, but we still don't have a good idea of where sellers and buyers might be sitting. We just have a very rough estimation of who is indeed controlling the major flow of the market. Rather intuitively, if we are going to look for the area where sellers are sitting, we will look somewhere around high number 2 because that was the origin of the vector that gave us the notion of downtrend. If we take a closer look at what happens around number 2, we will be able to see a few interesting details. The most obvious of these details is the fact that we have a fractal candle right at the top, and the upper tail of this fractal candle represents the highest point of high number 2. The fractal candle is also where the flow seems to have turned. Notice how price begins to go down immediately after that. We also seem to have an interesting frequency among the highs of the candles that surround high number 2. This indicates that price is hitting an invisible barrier in that level, and it's unable to continue rising as it was doing from number 1 to number 2. We also have the low of the fractal candle acting as an axis for a possible turning point line. All of this indicates that there is an orchestrated movement around number 2. This movement is responsible for the creation of a short-term memory in price, meaning that if price comes back to this level in the future, it might respect it in the same way that we are seeing right now. Let's fast forward price to see what happens if price reaches that area. In the moment that price touches the level of high number 2, price creates a fractal candle showing a slight shift in volatility, and with the obvious intent to the downside. Observe how this candle is larger than the previous candles. The narrative between the lines here is the following. Price was slowly going back up, and when it finally reached the short-term memory created by price around number 2, those sellers showed up again displaying slightly more power than the buyers. Even though price pierced the level of high number 2 a little bit, that pierce is not significant enough to be considered an attempt of market manipulation. These market manipulation maneuvers are usually more dramatic than this. Let's fast forward a little bit more to see the next behavior of price. Here we can see that price is respecting the level of high number 2 as some sort of resistance, and every time price touches that line, it either creates a fractal candle or a candle with a large upper tail. The interpretation here is rather obvious. Every time price touches the line of sellers, buyers become scared of the seller's size. It's almost like buyers are opening a door to the upside, but the moment they open the door, there are angry dogs threatening to catch the buyers. Eventually, buyers stop attempting to open that door, and they let sellers resume the natural flow down of the market. By taking a closer look to the minor flow, we see a very simple and tradable flow downwards. Price is just creating lower highs and lower lows, and swinging from one supply and demand zone to a lower low. A few candles after that, we find ourselves in another crossroads. The major flow appeared to have picked up momentum, but now it's encountering a supply and demand zone that would be classified in the minor flow. Here we have to observe if price is going to respect or ignore the minor supply and demand zone, because either possibility will give us important insight about this market. Observe how buyers pick up the market with great certainty after the minor supply and demand zone that happened in the middle of the major price vector that started in number 3. Price travels right to the line of major sellers once again. Look how organized this last vector is. Almost all candles show higher lows and higher highs. This is the moment where traders need to make a decision that is usually not so easy to make. We can either trust the short-term memory created by the major sellers in number 2, or we can trust the buyers that spiral off the minor supply and demand zone created in the middle of the price vector that started from number 3 onwards. If you are a retail trader, you will probably be in favor of the buyers. That's because retail traders are not aware of the subtle clues that shape their biases. For example, retail traders will look at that last clean vector upwards, and they will have the certainty that the market will shoot to the upside. However, we know that this is oftentimes an attempt to induce retail traders, and we know better. We have to go a little beyond appearances here and look at this rationally. The origin of this clean vector upwards is in a minor supply and demand zone in the middle of nowhere, so the minor buyers are going in a collision route with the proven major sellers of high number 2. The fact that we have a suspiciously clean and organized vector to the upside should be evidence for the strength of sellers, not buyers as the retailers will assume. Neat movements like these are often used to scare people away from the right opportunity because it's pretty difficult to sell this market in this moment right in front of this movement upwards. Now let's look at the smaller details. Observe how price creates a fractal candle when it touches the line of major sellers once again. If we were willing to sell this market in a strategic point, this is the moment to do it with a stop right above the line of major sellers. Let's also draw a pitchfork imagining that this is indeed the reversal point. There are even more subtle clues that indicate that this is indeed a turning point. If you look at the center line of the fork, you will notice that it acts as an angled support and resistance line. Look how price touches, switches, and then comes back at it later to touch it once again. The even more interesting thing here is that there seems to be a perfectly symmetric relationship between all of these major vectors if we take Newton's third law into consideration as it is explained in the Newtonian trading strategy. Let's see if this whole idea holds water. As you can see, when we have a converging narrative in alignment with the intersection of technical tools, we are able to observe the perfect behavior of price. Look how accurately the pitchfork caught the lowest low in the chart. From the tip of the fractal candle until the lowest low in the chart we have about 1800 pips. If you have interest in learning how to read price like that and trade like a professional, please visit the strategy store link available in the video description. If you enjoyed this video, please click the like button, subscribe to the channel, activate the notifications button, and leave your feedback below in the comment section. Thank you for watching and I hope to see you in the next video.